Okay, welcome to why reverse mortgage and why you need a financial plan in your golden years. I'm going to be brief. This is a presentation that will bring you up to speed as to why having a financial plan in your senior years is very important. First of all, with the collapse of the economy and the way things are going, we don't know when this is going to change, so sitting down and having a plan and knowing where your resources are is very, very critical. And what we've found is more and more seniors are in trouble financially, losing their assets through stock market investments, decline in real estate values, and list goes on. Unfortunately, in today's economy, just having Social Security is not enough. The last place that you can possibly find money is in your home, and that's what a reverse mortgage is all about. And it's not just about getting the cash. It's about planning. It's about setting up the right plan for your specific needs. That's why there's so many different plans available under the reverse mortgage. You have your monthly adjustable, you have your annual adjustable, you have your fixed, you have your combinations, you have changes that you can make within the reverse mortgage program. With values where they are today, you need to stop that bleeding. And the way that is done is by applying and receiving a reverse mortgage based on your current value. Real important is because one of the things you do with reverse mortgage is you can set up a credit line. Now, the credit line has a growth value, which is always and fixed at 0.50 or 0.5% higher than the interest charged on the loan balance. So, if you don't need the capital right now and you are looking into how to plan for the future, my suggestion is to look at an adjustable. Do not fear the rates, because the rates are at an all-time low, and they do have caps, so they cannot go up too rapidly. And if you set up the credit line, you will more than offset the growth on the mortgage balance. Your fees, which we really don't consider them fees because they're coming out of equity in your property. They are not paying them up front, and the longer you stay in the house, the more you offset those costs. And when real estate rebounds, which it will not stay down forever, and it starts going up. Now, being conservative, figure on a 4% return on appreciation. If interest rates should go up, and they will eventually, so goes the credit line interest rate. So the growth of the credit line is critical to support, because you always have that money available, and as the credit line grows, you will also be able to pull more money out. As your real estate goes up, so will the asset as far as the value. So when the balance of the mortgage goes up and the real estate is going up, you are offsetting it, and there will in most cases still be money left over for your heirs or whatever the case may be. The beauty of the program is that your heirs will never be on the hook for any shortfalls. Should real estate values go down further and you pass away or try to sell your home, if the loan balance is higher than the value of the home, the lender will accept the lesser of the value. In other words, if the appraised value is lesser than the loan value, then bank will accept that as full payment. And your FHA insurance that you pay for upfront and along the way will cover that shortfall. So your heirs and you are never on the hook for more, and no other assets are involved in the reverse mortgage, so you have the opportunity of passing on other assets. One of the things I like to tell clients is, if there's an insecurity that you want to make sure that things are all in right places, is possibly look into an insurance policy that would cover your death, that would make up any liabilities that you think that you fear. It's not for everybody, but it is part of a plan. Now look at the value of your home, and look at the growth of a credit line, again, it's security. And in this day and age, that is what's critical, is security. You need to have security to look forward, which you all know you cannot rely on your 401ks and your pensions and your investments. So even if you're not 62, you need to look at it and plan for the future so that when you do become 62, you will have an idea as to where you are going. If you are thinking of you would like to invest, well, or you have large bills you want to pay off, and by paying off the bills you are now increasing your net income, which is spendable money, then a fixed rate program may fit your bill. In other words, and if you need the security of knowing that you don't want to fear that interest rates may rise, then the fixed rate program. Now the fixed rate program, you must take all the cash at one time. You cannot set up a credit line or tenure, which is that monthly check every month. You must take all the capital at one time. And in cases where there's a higher mortgage amount or fear of the interest rates and want more stable, then a fixed rate is right for you. But the options are available. Now, some of the new programs that have come out is you can purchase real estate under the reverse mortgage, and it basically works the same way. The plan works that the purchase price or the appraised value, whichever is the lesser of the two, your down payment is calculated on that plus your age plus interest. And you can purchase and use the reverse mortgage as your mortgage vehicle. Very critical when negotiating a property is that if you are over 62, you're an approved buyer. So you are basically guaranteeing the seller that you can move forward and close on the deal. Great bargaining power, and I can tell you this over 20 years as a real estate broker that this is critical, and it will help you in negotiating a better price. Now, as of January, with President Obama's plan for stimulus, the limits were raised from 417, which was back in November of 2008, to 625.5 for the balance and the remainder of 2009. So if you're looking to purchase, you have a high-end home where the values are higher, you may be able to receive, hundreds of thousands of dollars in monies to help get you through the times. With taxes going up and all the other things happening and cost of living, having access to money, even if you don't need it right now, we all know things can happen, we all know things can change. You need to have access to that money. So if you don't need it at this moment, set yourself in a situation where you, one, freeze the value of your home by doing a reverse mortgage and locking up the value, and also having money set aside so that if you ever need it, it's there, a safety net. One thing that has never been utilized in investment portfolios because they don't have it is a safety net. That's why a lot of people have taken their 401ks and investments and rolled them into cash equity accounts because it freezes the principal. And you may not earn interest, but you will freeze your principal and protect it. With the reverse mortgage, you have the credit line that is growing at 0.5% higher than the loan balance, and you have access to the cash at any time. This is Tim Robbins. I am a reverse mortgage specialist, and I am here to help. Visit my website at bestmortgageplans.com to learn more. Call me on the phone at 877-463-6546, extension 215. I look forward to being a help to you and hope you have a great life ahead of you and enjoy your retirement. I'll see you in the next videos.